Morning, Steve Ray in Chicago with the morning grain comments. Well, overnight prices are higher led by soybeans and soybean oil. Outside markets, actually, Asian oilseed markets are a little bit lower. Palm oil prices are a little bit lower due to some slow export numbers that came out. But it seems like we're getting some new money coming into the grain markets. Not sure where that money is coming from, but I think it's because of the potential down the road of some less than normal South American weather. And also maybe if there is a vaccine, some inflationary numbers, and that maybe the demand for fuel and food will go up. As far as South America is concerned, we're seeing Brazil catch up with their soybean plantings, but it's still dry in Rio Grande do Sul. And with the late plantings and potential return to some dryness down the road, their crop could be smaller. Their farmers not selling, and so we did see that some of their February export values in soybeans dropped, which suggests that, since the plantings are now, let's say 70-75% done, it might be a little bit more confidence they'll have at least a few beans for sale for export in February. Still waiting for some daily China export sales news, but last week they did sell a big chunk of almost 1.3 million tons of total beans, and 1 million tons went to China. So right now, some people think that maybe a total of 38 million tons will be shipped from the U.S. to China, and that will drop our carryout maybe below 100 million bushels. Over in the corn, again, some South American rains will be helpful. We'll be watching to see how the weather is in Ukraine and Russia, but domestic feeders in both those countries are asking for some kind of export quota on corn to make sure that they preserve the domestic corn supplies for feeding. So that could actually help U.S. Corn export demand, and if China buys a little bit more corn, we could actually see the corn carryout drop below 1,400. Again, there are those people out there that talk about potential for beans trading as high as $15. And if you want to keep some kind of soybean corn ratio around 3 to make sure we get corn plantings next year, that would mean maybe $5 corn. And if those markets are achieved, then I don't think you'll keep wheat much below $6 here in Chicago. We also note that palm oil price is a little bit lower overnight, but given the tight supplies of palm oil and sun oil, some people that were looking for soybean oil futures to trade to 45 cents a pound are now talking about 50 and 60 cents a pound. That will also help support soybean prices. And with record crush, the first 2 months of our crush year, we're not seeing meal and oil prices back off, so it is absorbing the supply. In the wheat, I think we backed off yesterday because of the chance of some rains in the southern plains. Again, the maps do show that first week in December, some rains for the plains. But again, we're not sure if that is kind of a one rain event or if it changes the pattern down there. But right now, people think that in La Nina years, the southern third of the United States is dry. So if we have new money coming in because of our tightening U.S. Corn and soybean balance sheet, if we're still going to be talking about weather 3 to 4 months from now, and if we've got a vaccine, all those things possibly are positive to our grain markets. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.